What is the mortgage and financial market doing here this week now that the Fed's met? We'll dig into that. Hi, this is Jason Daniels with Finch & Gable Real Estate Company. And today we wanted to introduce Alisha Baty, affectionately known as the Mortgage Lady with Geneva Financial. And we work a lot together with our clients. And so we wanted to talk about what the market's doing. But first, I wanted everyone to be introduced to Alisha, and we can learn a little bit about her and her business. So tell me, Alisha, just real brief, kind of what got you into the mortgage industry? What do you like about it? And then we're going to make them watch this to get to the good stuff at the end as far as what's the market doing? Everyone wants to know, so pay attention.
So yes, I'm Alisha Baty, the Mortgage Lady. I've been doing mortgages for about 20 years. I got into it by accident. I think we all get into real estate by accident. And I just fell in love with it. I fell in love with helping people get into houses. And I believe that's the only way to really create true financial wealth in America is through real estate. And so it's really amazing seeing people change their financial life as well as their generational wealth.
Yeah, I like to say we're changing their family tree. And owning real estate is still an American dream that's very achievable. And a lot of people, they want to stop at their the home that they're living in, but those that we've taught and encouraged to continue investing beyond that, those are the ones that have created really solid retirement portfolios. So anyway, we believe the same thing. So real estate is one of the greatest opportunities out there for you today, even with some of the challenging times.
Exactly, and so that's one thing I like to teach people is how to, we call it debt management. So how to create wealth and use debt and make it better and create their financial portfolio. So it's pretty cool. I like it a lot.
So, that's one of the reasons why we like working with you. Tell us, give us a couple things that differentiate you from your standard lender or a loan originator. What are some things that you do that help you stand out?
So I guess the way I kind of explain it is we're the sweet spot of lending. So I kind of work with different banks. I shop around. I kind of figure out who does what. I can make things happen with using people's guidelines and who does what and to get them closed into a home. And just I think over experience and then willing to work. Hard loans don't, scare me. We just get it done.
Yeah, we've actually seen clients that we've worked with that had some challenging financial issues that many lenders would have just given up on them. And Alisha has actually stuck in it, found a deal that worked for him that made sense, and put in the extra hard work to get those loans closed, and those families are happily in their homes. So that's just amazing. So that's one of the reasons why we like to work with you.
Yeah, and really just making sure people understand their numbers and make their decision and not just here's an option for you. Why are you picking the option? What is this? What is that? How do I do that? And that really, I feel gives them the power to make those financial decisions and really know what they're getting into.
Absolutely. Well, the great thing with Alisha's here, we've partnered together here. We do business together, and you'll be seeing more videos, in the future with Alisha on here, kind of explaining things about the mortgage industry, different products, what's going on in the market like today. So let's go ahead and shift gears and talk about the financial markets now. Now we know the Fed met this week, and what has that done to interest rates? You mentioned earlier that interest rates are actually coming down.
Yeah, so there's it's a daily thing, right? So they're up a little bit, down a little bit. And so they're not trending completely upward and jumping, which is nice. Stability is very important in the mortgage rates. I'd rather have a little bit higher rate and more stability than seeing them kind of all over the place and trying to figure out what is going on. Rates suck. It's not.
We don't sugarcoat it here at Finch & Gable and with Alisha. We just kind of tell it how it is. So that's another thing I appreciate about Alisha is she'll just tell you how it is.
Yeah, but there's ways to use that to our benefit because right now you don't have as many buyers in the market. So even though rates are higher and they suck, we can set up your financial situation to be prepared to, whether that's refinance, whether that's paid off, whether that's whatever your financial situation is, we can set up the loan to make sense. You can buy down the rate, you can do 3-2-1 buy downs. There's a lot of different items that you can do to make it where it fits your family today. But today you don't have to fight for a house. You can kind of pick what you want. We have limited inventory, but there's inventory. You can sleep on it. Remember a couple years ago, you couldn't even, if you went to a house and you liked it, you took it if you got lucky. So it's just a good opportunity, I feel like, to secure a home right now, even though you're paying a little bit more in interest rate for it.
Yeah, and I would agree with that. Just 2 years ago, we were seeing 9, 10 plus offers on homes that are in that average to median sales price range. Today, median price is down about 3%, that's it. Sales are down 25%. So we still have a tight inventory. There's buyers on the fence, and here's my prediction, Alisha, what's gonna happen. I think what we're gonna see is the moment that rates get into the 5s, or maybe, knock on wood, hopefully the high 4s, I think we're going to see all these buyers jump off the fence, and there's going to be a huge need for more inventory, and that's going to jack up the price. I think we're going to see an increase of the average or median sales price of $25,000 to $30,000 over a 12 to 18 month period once interest rates start coming down. And what that means is multiple bidding wars. So not only is the average sales price going to be $25,000 to $30,000 for your average home, you're now going to be duking it out with cash buyers again, and who knows what that's going to do with those large institutional buyers. They may come back into the market. So instead of fighting BlackRock and some of these large conglomerates again in the future, if they decide to buy more real estate, now's your chance where you're just competing against, the local buyer or maybe the local investor who's not paying top dollar for homes anymore. So we can structure deals for you where the seller's paying closing costs or buying down your rate. And if you're a seller, we can help negotiate and structure that deal with that buyer too, so it makes sense. We can do some creative marketing around interest rates and things like that. So now's still a good time. If you are in the market to sell a home and you need to sell. Give us a call. We're going to help you navigate through that. If you're a buyer, I would encourage you to purchase unless you're stuck in some long-term lease you can't get out of, or you're not sure you're going to stay in the Colorado Springs area for 2 to 3 years. Other than that, if you can afford to purchase a home now, I would encourage you to contact Alisha or a reputable local lender to get pre-approved and see what you qualify for, even at that higher interest rate, because you can buy the home now and you can always refinance later, because we all believe the interest rates will be coming down. They have to for our economy to survive, and I don't believe the government's going to allow this economy to crash too deep.
Yeah, I don't either. I mean, I definitely think they're going to come down. I mean, I read it all the time, and that's the news that we hear on our side as well. We don't know when, we don't know how much. When they're going to come down, low 6s, then the 5s. If we get lucky, we'll see 4s again. We're not going to see 3s and 2s unless something happens.
Yeah, those are gone now.
So again, that's just one of those reasons that we're going to have shortages, because people aren't going to want to sell their houses because of the rate. And so we got to teach them how to be landlords, and we've got to do different creative things. But creative financing and debt management is definitely the way to go. And so just calling and finding out where you are and what your numbers are is the best way to get started.
Yeah, and if you own a home and you want to move, if you have the stomach to be a landlord, we can help guide you through that. And if you have a 2-point-something% interest rate, you're probably going to have pretty good cash flow as long as you haven't over leveraged that property. So appreciate your time today. If you have any questions about mortgages, you can reach out to Alisha. What's the best way for them to contact you?
Yeah, just reach out. You can call our business line, which is 469-877-RATE.
All right. Well, again, thank you for watching here. We're going to roll out some more videos with Alisha and kind of what the mortgage market's doing. Job reports look good. Not a lot of unemployment, so that's good news for the economy overall. And I think we're headed in the right direction now. They're going to meet again, I believe, in September, October, November to monitor this inflation. Inflation's come down, not as much as they had hoped, so we'll see what happens over the next quarter. But again, if you need to buy. If you need to sell. We're going to walk you through that. So thanks for watching. We'll see you on the next video.